On April 2, 2025, President Donald Trump announced sweeping tariffs aimed at fundamentally reshaping America's trade relations, marking yet another dramatic chapter in his economic policies. The move involves a broad 10% tariff on all imported goods entering the United States, accompanied by additional targeted tariffs on several key trading partners, notably China, the European Union, Japan, Vietnam, and Cambodia. At its core, the rationale presented by Trump emphasizes correcting perceived trade imbalances and reviving domestic manufacturing sectors. While supporters argue that such protective measures will help American industries compete fairly against international producers, the potential consequences of this policy are multifaceted and likely complex, raising significant concern domestically and internationally. For American consumers, the tariffs' implications could be stark. The immediate and most visible impact will likely be higher prices on an extensive range of goods, from electronics and appliances to clothing and automobiles. Given the U.S. economy's deep reliance on global supply chains, many domestic industries depend heavily on imported components and finished products. Consequently, tariffs would inevitably translate into increased costs for manufacturers and retailers, with these expenses passed directly to consumers. This upward pressure on prices comes at a challenging economic moment, as inflation continues to burden households already strained by rising costs of living. Middle and lower-income families in particular may find themselves disproportionately impacted. Essential goods, clothing, household appliances, and electronics will potentially become less affordable, reducing overall purchasing power and potentially dampening consumer spending, which is the primary engine of the U.S. economy. Moreover, these new tariffs risk provoking significant retaliatory actions from America's trading partners. Countries targeted by the tariffs, such as China, Japan, and the European Union, have already signaled their willingness to respond in kind. Reciprocal tariffs would particularly affect American exports in agriculture, automotive, and technology sectors, potentially causing considerable economic distress to industries already vulnerable to international market fluctuations. The reciprocal tariffs from the global community are expected to reduce demand for American products abroad, causing distress for U.S. exporters, particularly farmers and manufacturers reliant on global markets. Reduced exports could lead to layoffs, business closures, and economic hardship, especially in states heavily dependent on international trade. The agriculture sector, frequently a target of retaliatory tariffs due to its economic and political significance, may face falling revenues, putting rural economies and communities under strain. From a global perspective, Trump's tariffs could trigger broader economic disruptions. The interconnectedness of modern economies means that a trade dispute initiated by one major player like the United States can ripple across international markets, creating uncertainty, supply chain interruptions, and reduced economic growth worldwide. Emerging markets, heavily reliant on stable and predictable trade relationships, may suffer disproportionately. Developing nations, particularly in Southeast Asia and Africa, could experience reduced access to American markets, limiting their economic growth prospects. Additionally, the tariffs may precipitate market volatility. Investors tend to respond negatively to protectionist measures, wary of potential disruptions to trade flows and economic growth prospects. Financial markets, which prefer predictable and open trade environments, may experience increased uncertainty and instability, leading to fluctuating stock prices and reduced investor confidence globally. At a strategic level, these tariffs signal a pronounced shift towards economic nationalism, potentially undermining the multilateral trade agreements and institutions that have governed global commerce for decades. This move away from cooperative economic frameworks could further isolate the United States diplomatically and economically, complicating international relations at a time when global cooperation is vital to addressing broader challenges like climate change, pandemics, and geopolitical tensions. Ultimately, the long-term effects of these tariffs will depend significantly on how prolonged and entrenched the policy becomes. While the Trump administration posits that these measures will stimulate domestic economic resilience and industrial revival, critics fear they could instead lead to increased consumer burdens, strained international relations, and diminished global economic stability. In conclusion, the announcement of comprehensive tariffs by Donald Trump on April 2, 2025, represents a profound turning point in America's economic policy. While the intended goal of fostering domestic industry might resonate positively with certain segments of the U.S. population, the broader consequences, increased consumer costs, reciprocal global tariffs, economic volatility, and potential long-term isolation pose considerable risks. As markets brace for impact, policymakers and consumers alike must carefully consider whether the purported benefits outweigh the extensive and potentially enduring costs.